if you think of Bitcoin, Bitcoin has one job and it has one target, which is global savings. And so Bitcoin is a power law distribution because over time, you can only get to 100% of global savings. Infrastructure layer can scale infinitely, which is why, again, Google and all of those companies have just been like that on the log regression channel.
What if Bitcoin is just the beginning? Macro investor Raoul Pal says we're witnessing the birth of an entirely new digital economy, one powered by AI, blockchain, and unstoppable liquidity. While most investors focus on Bitcoin's rise as digital gold, Pal believes the real opportunity could be even bigger. According to him, the infrastructure behind crypto may become the foundation of the global financial system. Here's why he thinks this bull market is far from over. While Pal remains highly bullish on Bitcoin, he distinguishes Bitcoin from smart contract platforms. Bitcoin, he says, has one primary mission: become the world's digital store of value. Its target market is global savings. That is an enormous opportunity. As governments continue expanding debt and central banks continue managing economic growth through monetary policies, Bitcoin serves as a digital alternative to traditional stores of value. Pal views Bitcoin as a power law asset. Its adoption continues growing as confidence in the traditional financial system declines and digital alternatives become more attractive. However, Bitcoin's opportunity, while massive, is still ultimately bounded by the size of global savings. Layer 1 blockchains may have an even larger potential opportunity because they function as infrastructure platforms capable of supporting endless economic activity. The distinction is subtle but important. Bitcoin stores value, Layer 1 networks create value. Both can win simultaneously.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
This is the universal basic equity idea, right? For the first time, we've got a globalized infrastructure, digital infrastructure, unlike the internet, that we can participate in, that the AI and others will use, and we get to reap the benefits of them. Right, this is the trade-off we're giving to them taking part of our knowledge work away, is they're going to give us the ability to make money from their economy that they create. Over time, the layer ones, people don't understand this, is the layer ones, if you think of all big networks that are important for infrastructure, whether it's operating systems, whether it's cloud, all of that, there's basically 3 to 4 main players. Then there's a bunch of specialists, and then there's a tail of stuff. But it really accumulates to 3 or 4 to 5 people. This will be the same. So it's going to be around 3, 4, 5 chains as layer ones. Then there'll be specialists, like Hyper's a specialist. Can that continue to one vertical niche thing? Okay, great. There'll be somebody who does something slightly different, privacy, but that's really on the Bitcoin side of the ledger, which is a non-smart contract. So the infrastructure layer becomes much more important than people understand. We've talked about in the past. Every ticket becomes an NFT. All of these things, the whole finance system comes on board. That's all accruing value to layer ones. How I try and explain the value of a layer one is Ethereum. Okay, so if you were to pull the plug on Ethereum today, how much economic value do you destroy? I mean, huge. Every layer 2. All of DeFi, all of the real world assets, all of NFTs, everything that's been built on ETH goes to 0. ETH is probably undervalued for that already, let alone the growth rate of these things, and let alone thinking, well, the finance system's going to come a lot on ETH and layer 2s and stuff like that. So that's how you've got to think about what is the value of that infrastructure. And so if you think of Bitcoin, Bitcoin has one job, and it has one target, which is global savings. And so Bitcoin is a power law distribution because over time, you can only get to 100% of global savings. Infrastructure layer can scale infinitely, which is why, again, Google and all of those companies have just been like that on the log regression channel. Because Bitcoin is going after global savings, but global savings should go up if AI changes economic growth. So therefore that increases the eventual outcomes for Bitcoin itself. I think that there will be enormous amounts of liquidity from the private sector coming from debt that's going to feed this cycle. And that liquidity is debasement of currency over time. So that's good for Bitcoin. And Bitcoin is a digital store of value. And we're creating an increasingly digital world with digital intelligence. So yeah, it's fine. I think the layer one smart contracts are a better bet on all of this. They just don't feel like it yet to people. And the market can only have so much focus at once. And we've seen this before in crypto bull runs. It focuses on three things and it can't see the rest and everything pauses for a bit. And then it rotates to the next one because the market only has so much attention, so much capital at any one time. Crypto, there's only a certain amount of liquidity in the system. The US withdrew liquidity for the government shutdown. That lags crypto by 3 months. It hit crypto, that was 1010 was in the middle of all of that. Liquidity's picking up again, crypto's picking up again, but there's a gap because NASDAQ, because of this massive need for capital and investment in the space, it just sucked in capital. The Chinese, for a period of time, bought a lot of gold in that gold rally. So what happened was the riskiest of assets, the furthest duration assets, which is SaaS companies and crypto, produced identical charts, and they just got left behind for a bit. But what's happened is literally everything's changed. Because in that period, from that period of October last year, we birthed economic agents. And they're scaling everywhere. Everybody's building them. So what you've got is, it dawned on me suddenly, is like everyone's like, yeah, agents are going to use wallets and blah, blah, blah. But then when you play it through, from what I've been talking about, the speed of which this is happening, this means crypto has an infinite TAM. The total addressable market is all of the agents. And they will be economic actors in their own right, building their own businesses, stuff like that. So it's changed everything.
Another major pillar of Pal's thesis centers around liquidity. Historically, liquidity has been one of the strongest drivers of crypto performance. When liquidity expands, crypto tends to perform exceptionally well. When liquidity contracts, crypto often struggles. Pal points out that many investors became discouraged during recent corrections, interpreting price declines as evidence that the broader thesis was broken. But he sees it differently. In his view, crypto simply experienced another normal correction within a larger secular bull market. He's seen this repeatedly since entering the market in 2013. Bitcoin has experienced numerous 50 drawdowns during broader uptrends. Ethereum has suffered severe corrections before making new highs. Solana and many other crypto assets have undergone massive temporary declines before producing extraordinary returns. These volatility cycles are no exceptions. They are part of crypto's nature. What matters is whether the long-term, structural drivers remain intact. Pal believes they do.
It's still Metcalfe's law. It still follows the log trend, and that would take us still there. You might get there a bit earlier. But what it kind of means is it just keeps going. Because the debasement of currency won't stop until debt to GDP collapses. We're not there yet. GDP growth is not fast enough. We need to get through the economic singularity. Then we see, the global coordination rails of blockchain being used for more and more things. Don't forget, the entire financial system is going onto these rails. And you get to front run it. They've announced what they're going to do. And I've always said this, we've been able to front run the institutions all the way through. And people get exasperated with crypto because it went down for a year. And you're like, look at the fucking picture. You've got an infinite TAM, the entire financial system going on these rails, the Clarity Act being passed, the government will not stop debasing the currency. So it just keeps going. It's a nasty correction in a bull market. Now, I've been in crypto since 2013. I've seen many corrections, non-bear markets of 50% in Bitcoin. But people forget this every time. And when that happens to Bitcoin, others go down more. We've talked about this in the past. There's a risk curve. It's natural. Happens all the time. I think it was Solana last cycle did down 80 in 2021 before it had that massive run. And that was in a bull market year with liquidity flowing. Happens all the time. Happened to Ethereum. So it happens all the time. Can't see how it stops because the race is so big. So what is the US going to do? Is it going to withdraw liquidity? and then everything slows down? Well, maybe, but if China doesn't, then there's a real game here that has to be played. And don't forget, they've rolled all of the debt to the short end anyway. So that's kind of an ongoing process. You just keep issuing debt. So I don't know if they tighten liquidity unless we end up with a larger inflation. But what Scott Bessent is saying is we're going to run the economy like the Greenspan years. And what that means was Greenspan basically came in, cut rates, and then did nothing. He did literally nothing. Because the economy was hot from 95 till 2001. Headline inflation was going up a bit, but he's like, productivity will take care of it because of the internet. And so core inflation was flat. They're going to do the same thing. They've said it very clearly. So that's why Walsh goes in. He does nothing. He cuts rates and then does nothing, just gets out of the way. Lets productivity miracle take the rest, and then let the economy grow faster than the debt pile. So debt to GDP goes down. That's the only game they can play. Certainly within Global Macro Investor and Real Vision Pro, we've got a whole load of recommendations since I came up with the whole exponential age thesis, which was basically this. I just didn't imagine it was going to go this fast. So I've had most of those kind of names for a while. I still think the crypto bet is one of the superior bets in the space. It just doesn't feel like it right now. In general, you'll end up over extended period of time making more money out of crypto than you will out of the bigger hyperscalers and stuff like that. Sure, it's difficult to compete with the chip companies. They're the single most important part of the units of energy into units of intelligence process. So all capital flows there. And there seems to be no signs of this stopping. Literally every one of them has been on television in the last week saying, we are booked out for 3 years and we have to book out beyond that. There is such a scramble for chips that now AI is giving their older data centers to Anthropic, who can't get enough chips. Nobody can get enough compute and nobody can get enough energy right now. I mean, we've never seen anything like this. There's been nothing like it. And unlike the tech boom in the late 90s, there's no debt here. Really. It's very little. So it's being run out of cash flow of the biggest, most cash-generative firms in history as well. I don't know how this stops.
Another key element of Pal's framework is government debt. Governments around the world continue carrying historically high debt burdens. Reducing those debt levels is extraordinarily difficult. One common solution is currency debasement, expanding money supply over time while attempting to grow the economy faster than debt accumulates. Pal argues this process is unlikely to stop anytime soon. As long as debt remains elevated and policymakers seek growth, liquidity creation will continue playing a major role. That environment tends to benefit scarce digital assets like Bitcoin and other crypto networks. The result is a powerful long-term tailwind for the entire digital asset ecosystem.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.